still on the revenue diversification, and I heard you twice speak about how this is one of the strategic direction that you're taking in. One of the standout themes is definitely that we noticed your net interest income declined as rates fell, and then the non-interest income grew strongly. And I wanted to ask you, are we witnessing a structural shift away from the traditional lending towards more fee-based banking? I wanted to ask you that.
Partly, yes. Of course, the NII picture will improve as lending volumes pick up. And the ideal picture that you are aiming for is a picture where the pricing environment is down and stable. Customers can reliably predict what it looks like, can compare transparently across different banks, and therefore the demand for credit then goes up. And therefore you see higher volume on the back of which the entire economy then is lifted. So that's the overall aim, and that is what we aim for. So NII as a component will always be there, but based on a higher volume of business rather than on a higher margin. That's the direction of travel. And then, as you say, you have to continuously invest in new streams, new innovations that then build your NFI side of the business. And for us, we are very pleased in 2025, 12% up year on year, a significant number in Kenya shilling terms as well, and mainly coming from all the innovations and new businesses that we've done that I was talking about earlier, your bank assurance, your asset management, your custody business, and all these new streams starting to come in and feed that NFI line, and therefore are rebalancing to some extent the ratios between the two, and ensuring that we continue to see a faster growth on the NFI, and of course growth of NII driven by volume, driven by new customers coming in.
Absolutely, and congratulations by the bank assurance you're leading when it comes to profitability. I have to follow up on that. If this shift happens, as you've said, you're still also very much on an observation point of view. If it happens, could we be looking at a future where banks earn more from transactions, payments, and advisory services than from the lending itself?
Well, you want to balance it because lending is such a key part of what banking is all about, intermediation and providing that service to the economy, where you pull deposits and lend it out to viable business projects. And the more lending you do into the market, the more the economy grows. So it's a core and primary part of banking. But at the same time, I must say that the share of NFI is starting to go up. And this is good volume-based transactional business. And it's something that rides on the back of innovation, on the back of digital development. And that's a good thing for the bank and for the industry.
Digital banking, I could see the numbers there, the rise in itself, and I wanted to ask you, the transformation continues definitely to reshape this entire sector. And I don't think there's in any way going back to it. In fact, last time we talked, you talked about even developments in the AI to ensure that you're doing this in the most advanced technological way. So how important is this going forward in terms of efficiency and customer experience for you?
The digital business continues to be an important part of the way forward, both for us in country here, but actually for the entire ABSA group. The digital strategy is quite important to us. One aspect of it is the client-facing part of digital banking, where you provide the necessary solutions that help clients transact with the bank in a more digital and cost-effective manner. And we presented today that now 94% of our transaction volumes are happening through digital. It's only 6% that is branch and physical channel based. That's something very good, and we want to continue driving that direction. But the other side of it is excellence in the back office and digitizing our own operations and ensuring that as much of the transactions as possible go through what we call STP, straight through processing.
Okay.
And today we are 71% STP, and that number has been going up over the past few years.
Okay.
The idea being, you aim for STP in the 90s, closer to 100 over time. And what that does is it takes out cost, it takes out inefficiency, and it also improves customer experience over time.
Yeah.
So the digitization journey is a very, very important one. It's a key part of the investments we make on a yearly basis, and it's something that we continue to drive as we move forward.
One of the key areas that I also noticed that has shown strong growth in your books is the wealth and asset management, and very significant growth there, looking from where you started to the levels that you are at right now. Assets under management increasing very highly. What is driving this momentum in investment products and wealth services?
First of all, the market is becoming more aware.
Okay.
Younger people are investing. The investment ticket amounts are smaller, but the volumes are higher.
Yeah.
Kenyans are increasingly becoming, interested in investing and saving for the future.
Yeah.
Secondly, through digital capability, is allowing customers to do it more easily and ensuring that the product that we have is a good product.
Yeah.
Thirdly is how we structure it on the investment side and ensuring that, the asset classes that are available provide not just higher returns, but also provide the necessary diversification that protects the customer.
Yeah.
So it's a very, very important demographic change and customer behavior change that we are seeing in the market. And we believe it informs the future of products such as this.
Yeah. I love this. I was looking at the numbers on the NPL and I gave a smile because you had indicated you could ease. And I have to say, well done on that. I've seen the ratio has gone a little lower now, below industry level, quite a distance now. What specific measures helped you to ensure that you have lowered this? You must have had some tough things that you did.
Yeah, look, it's an area of great strength for us.
Yeah.
In fact, we have never been at the industry average. We have always been below the industry average.
Yeah.
We were very proud in prior years to be in the single digit for a long time.
Yeah.
Last year, as you know, it went up to about 12, and I think that's when we were having that conversation.
Yes.
And I told you that as the rates come down, and as we improve in our collections effort, you will start seeing this number trend back down, heading more back to the single digit.
And it's happening.
And we have seen the journey start. A big part of it is really just excellent collection and recovery efforts over the entire portfolio.
All right.
And then we've had one or two legacy cases that are resolving as well.
Okay.
And that helps in the process. Yeah.
All right. Well done. I'm not sure. When we spoke, a bit of ratio increment was on the manufacturing and consumer lending. Is it still the same figures that you're looking at, or
sector-wise, it still roughly is.
Okay.
And we expect that to continue improving.
Excellent.
But the sector mix has not changed by much. Yeah.
All right. As we come to a close, shareholders, definitely, they have to be addressed with you. You had some good news for them. And I've also looked at your market cap, the growth, very significant over the years. I think we're talking about 103 billion so far and going. Speak to them. What have you given them, and what's the news you're giving them moving forward?
Yeah, look, I mean, today we shared a 4 or 5 year picture in terms of shareholder returns. Yeah. And we look at it through two lenses. We look at it through the actual dividend payout and the payout ratios. Yeah. We also look at it through the share valuation and what the shareholder is gaining through their own valuation as well. Yeah. And both of them have grown double digit, 17% up on the dividend payout, higher than the increase we had last year, which I think was 13 or 14%. Yeah. On the valuation side, as you said, the market cap has doubled in the last few years. And we are now, a top 3 bank in market capitalization. And we are a top 5 company in all the listed companies in the country. And that improves the shareholder value and it improves the the valuation of the asset that they are holding. So that's what we announced.
Okay.
And, the trend has been good in the last 4 years or so.
Yeah.
And we want to maintain that trend going forward.
Wow. Finally, your outlook moving forward, 2026.
I think the outlook has two components. One is really just looking at the Kenya macro and everything that has been happening. The CBR coming down, inflation under control.
Yeah.
And the outlook from that perspective is more of our customers being able to do more business, more of us being able to support from a lending perspective.
Yeah.
And it's one of growth.
Yeah.
However, we live in a world.
Yeah.
There is a lot going on.
Yeah.
And those macro events that are happening in the world could have potentially impact as well. And that's something we continue to watch very, very carefully.
All right. Thank you so much, Abdi. As always, the Trading Bell will always be checking on you to see how the things are.
You're doing a good job of keeping us.
It's important. It's what shareholders would want as well to get to know.
Yeah.
Thank you so much. And we wish you well as you kickstart almost even your tail end of your strategy.
Thank you.
We'll be keeping in touch on these levels.
Thank you.
There you have it. That is Abdi Mohamed, very optimistic and always looking forward. The share price, look at it. Market caps as well going up. And we can't wait for, really to see how this goes on as well in this particular rally that we're seeing. Thank you so much for your time and living out with the markets.